What's up, traders? Welcome to the weekly forecast for the coming trading week. And this week we are entering September, the month where the whole market is waiting for. Why? Because the Federal Reserve is expected to start cutting the rates. As we remember, the last Friday in Jackson Hole, the Federal Reserve came and said the ground is ready and the Federal Reserve is ready to take action, and everyone expects the Federal Reserve to actually go and make it happen. Finally, as we know, the pressure on the Federal Reserve was huge from Trump's administration, forcing him to cut the rates. But Powell did not rush and waited for all the signs, which seemed to start being ready, and the cut is coming. The biggest question would be here: is it going to be one-time cut, or we will see a following series of cuts? More to come in September. With this idea in mind, there are many interesting things happening on the chart. Let's begin. The first one, gold. On the gold, what we see here, and a quick follow-up on the last week discussion, one of the scenarios we were following was actually the breakout of this range. If you didn't watch this video, you can follow all our videos on a weekly forecast on this very channel. So one of the discussions we had was exactly that, the breakout of that triangle and the expected continuation up. Is that a beginning of the next huge move? I personally have my doubts here. And the reason I have my doubts here is because we are extremely overbought conditions on a monthly chart. Look what happens here. RSI is screaming above the 80 for the last few months, and we saw the rejection of the sellers here. We saw the buyers are cashing out positions here. So this rally might be nothing more than a trap. Many times it happens this way exactly. If we go to the weekly chart, the ideal scenario here would be to see this rally taking place, completing some sort of a divergence here, while the market makes higher highs, indicator to make lower highs, and from there a big sell. Don't forget that the big players know that in such cases, lots of buyers stepping in, lots of buyers have their ambition and their dream that the gold is going straight run to 4,000, maybe even 5,000. I personally, at least at the moment, have my doubts here. So I believe that this breakout should bring a rally, but as soon as we see that forming higher highs on the chart and lower highs on the moving average of the MACD, I would be then looking for a sell. The next one is the S&P 500. Last week we were talking about the expectation to get closer to this line, the dynamic resistance line connecting the peaks in this ongoing channel. But we also discussed to pay attention to this building up divergence. It is a question of time for a major reversal to take place. So what do we have here? If we start from the monthly chart, we're not going to trade it, just to explain what we have here. We see that the S&P has a potential bearish divergence. Potential because we didn't have yet a second peak. For that to happen, MACD need to tick down. If it managed to do so, that's a significant sign that a potential peak is formed. Meanwhile, as it didn't happen, the rally continues. We need to start and pay attention to the opposite side. Take a look what happens here with the relative, from all these highs, and the RSI forms slowing down conditions. That's usually a rounding top that hints that the buyers are exhausted and start to lose their grip. So if we take a look on a daily chart, we are facing another fake peak. Every attempt so far, one and now second, to make a high and hold above it was failed. and the sellers instantly reject and push the prices to the downside. Is that enough for a sell? I think it's an early sign. There is a great probability we will see a final run, like a trap run here, before the sellers actually step in. However, pay attention to this low. If we can see the S&P sellers breaking this trend line and breaking this low, then I expect to see sell the rallies. If it doesn't happen, then we might actually see the S&P climbing to retest the dynamic resistance line. Next one is the euro dollar, and a follow-up on our last week discussion. We were following to see if this breakout will happen. But the last week was a flat move, which is kind of typical for August, last week of the summer. It's very rare that something significant happens, and indeed nothing happened. So the plan we discussed last week remains on. We have I said double or triple. We have double scenario here. And that's the first scenario. The bullish one is that the euro dollar would be able to break this dynamic trend line, retest, and complete the final rally to 119, 120, maybe even beyond, towards the 122 up to 123 area. The reason I expect these levels is if we go to the weekly chart, we will see that we have, let's zoom out a little bit, we will see that we have a dynamic resistances here at that zone. Strong area around the 120, the next one is around 122, and the 123, 124, about the last significant monthly peak. So, is there a chance the euro will actually make this break, complete the rally? The answer is yes. If that happens, I would be looking for the bearish divergence and a sell-off after that. And the way it looks on a daily chart would be, as we discussed, break above the trend line, retest, rally towards this area, then look for the bearish conditions. Higher highs on the chart, lower highs on the moving average on USD, and then a sell. Could this rally, by the way, be a trap? The answer is yes, and for that we can get prepared. How? By understanding the meaning of these levels. If we got this breakout and instantly break to the downside, right, a false break above this trend line, then watch out for this formation on the price. 2 waves down followed by 2 waves up and a breakout. Many times hint that we are going to a deeper correction to the downside. If that happens, I would not be surprised if we would retest the 114 area, maybe even below that to the 111. So this is the double trading plan on the euro dollar. I definitely expect things to happen in September. So stay tuned. Final one, Bitcoin. A couple of weeks ago or 3 weeks ago, one of the scenarios we were talking about on our weekly forecast, and once again you can watch all these videos on this very channel, was to see this final rally and then the Bitcoin to create this kind of a wedge and a drop to start and happen. That's exactly how the price follows and what is coming next on the Bitcoin. So, long story short, we are on multiple time frame bearish divergence here. Starting from the weekly chart, we saw higher highs on the chart and, of course, lower highs on the MACD, and that is where the weekly bearish divergence comes in play. Usually that is a beginning of a deeper correction or some sort of a range. Following the daily chart, we saw the same thing happening. False breakout, break to the downside, lower lows on the chart. That's a great sign that the sellers are in the game, especially when we take a look on the trend line, the broken trend line, which was retested and pushed to the downside. So what's next with Bitcoin? I believe rallies should take place, right? As a usual scenario, probably we will retest the broken support, which now acts as resistance, maybe even the last high, which behaves as the supply, but I expect at the end of the rallies to look for the sells. So long story short, I do expect Bitcoin to create some rejection, but the longer term plan is for me sell the rallies. That's it pretty much for the coming week. So I wish you a wonderful trading in this week and in this month, and I'll see you soon with more trading opportunities. Good trading. Bye for now.